I am the director of the Amplifier program here at 88.9 Radio Milwaukee. And I have my good brother all the way from Las Vegas, but he's really a Milwaukee native. He's born right here in the city of Milwaukee. My good brother, Will Rountree. I'll call him the credit and funding guru. How you doing, my brother?
Man, I'm blessed, man. Thank you for having me. It feels good to be back in the snow.
Literally.
Sarcasm.
Right. Man, listen, out of all the days of the week,
Man.
that snow, I'm small, that snow's so heavy, man. The snow plow was having a problem moving that joint.
And my blood is thinned out, Chad. So
Yeah.
I'm cold. You know what I'm saying?
Man, listen, we appreciate you still making it. I'm glad you flew in early because you might not have made it. So that was a blessing, man. And I want to shout out the audience as well as people rolling on in, braving the weather. I want to shout y'all out too, man, because y'all could have been anywhere, comfortable in your own home, but you showed up anyway. So I appreciate y'all. And I also want to shout out B-Mo Harris. B-Mo Harris are doing big things in our community. And later on, I want to bring up Miss Brittany Keys to just give us a little conversational piece about B-Mo Harris because they've been doing a lot of things in our community for a lot of years, man. And it's just good to see that they have our back. And they came in the snow. I was waiting on a call saying, listen, we're not doing this.
And the crazy part, Chad, people came to get the money. The money is here, and
the money in the house now. The money is in the house. Yes. So if you're on live, we glad you on live joining us. And I see it's about 300. It's about 300 people on live. But well, appreciate y'all for showing up.
And so people are selling people on things because it plays off of their fears of a quick fix.
Mm-hmm.
And that's what's hurting the communities and why sometimes people in the credit space get a bad name because it's an easy industry to take advantage of people.
Right.
It's a quick money grab for a lot of people in this space.
Mm-hmm.
And so knowing what's impacting the credit, then once we know that, I tell people, you got to understand what are the 5 components of what makes up a credit score. 35% is payment history, meaning, do you make your payments on time? That's probably most people's issue when it comes to their credit. They don't have bad credit, they just don't pay their bills on time. Or they got a late payment or some type of mishap, because one late payment can drop a score 150 points or up to.
Right.
30% of your score is credit card utilization, meaning how much do you have in credit card limits, and then what is the balance? Anything over 30% of the total limit, your score drops. So if you have $10,000 of credit cards limits, if you spend over $3,000, your score drops.
Right.
You'd be surprised how many people don't have bad credit, they just need to pay their credit cards down.
Right.
And then the flip side of that, you'll have people who don't believe in having credit cards because it's debt. If you don't have credit cards, you miss out on what makes up 30% of your score. Right. So your score can only get to a certain point because you're missing what makes up 30% of that. Another thing, or another side of that, let's say all you ever had was an auto loan, okay? You're making your payments on the auto loan. You've had it 3 years, you finally paid it off. Now your score just dropped because the only component of what made your score was payment history. And you just essentially close that account. So you have to know all the different sides, and so that's why I try to teach people about credit and not just fix their credit. I don't even like being called a credit repair guy.
Exactly.
Because I'm really an educator. It's deeper than that. I'm an
Yeah.
educator. Like, I'm really trying to educate you, and that's why 60% of people who usually get their credit fixed end up back in the same situation.
Mm-hmm.
But that's the hustle of the industry. I need you to keep coming back, Chad.
Right.
Because the bad credit repair person is a one-trick pony.
Right.
So no, I don't want you to know everything. Go out there and rack them credit card points up. Go buy a car you can't afford because I know you're going to come back.
Mm-hmm.
But if I educate you, you're not coming back for me to repair your credit, but you may come back so I can help you grow in life. And that's, by leveraging your credit to grow your business or invest in assets or whatever the case may be. So the next thing is knowing how to deal with collection accounts. Some people who have items that they haven't paid and not knowing what to do. Here's something that most people don't know. You shouldn't pay your collection accounts without knowing what to do. And if the debt has been sold to a third-party collection agency, technically they don't own that debt. So you don't owe them no money.
Right.
But you just have to know the laws and what to use to be able to fight them. And when you dispute it, if they can't prove the debt down to the penny, sending the right type of documentation to forcing them to say, hey, show me proof that I owe this debt to you. And if they can't, they have to delete it off your credit report. Now, it doesn't mean you don't owe the money. It just means from a credit standpoint, it doesn't impact you negatively. So that's why I tell people, don't pay a collection account. Another thing, bankruptcies. You know, people are scared of that B word.
Yeah.
The bankruptcies.
That's a fact.
But here's the thing that I started to learn, Chad. Bankruptcy is really just a strategy or a concept that wealthy people use to protect their assets.
All the time.
But unfortunately, our communities or the poor communities have been convinced to use bankruptcy as a get out of debt free card. I've seen people file bankruptcy for a late payment.
That's crazy.
But they do it because the attorney hustled them because they need you as a client.
Right, they want that
They want-
$1,500, $2,500 to do it for you.
They want it.
Right.
And so a lot of organizations have monetized the trauma of our communities, and that's why, this is why I continue to educate people. No, you file bankruptcy if your wages are being garnished, because your income is your asset at the time. And so we have to start learning, you know, what is credit repair, how to effectively do it. You know, I have sample letters in my book, Credit is King, which you can't get on Amazon, by the way. And so you have to learn both sides. And then once you really start to see the power of having great credit, like I tell people, your credit score determines the school zone your kids go to school in.
That's a fact.
Because if you can't pass a credit check to live in a more affluent neighborhood,
Yeah,
you gotta live where they will accept you. Your insurance rates,
Yep.
and we know how insurance rates in Milwaukee are
Crazy. Yep.
crazy. But it could potentially also be contributed to your credit being in a bad position. You know, I remember there were parents who couldn't rent instruments for their children and who were in the band because their credit score was bad. And then here's the flip side, because we always think, oh, well, I got cash, I don't need credit. I don't care how much money you have. There's some banks that won't do business with you without checking your credit.
Yep.
And so once you start to notice those things and know that no matter where your credit is at, how bad it is, how damaged it is, it can always be repaired. It may take time. It may take 2 years, like it took me 2.5 years. But that's just the process you have to be willing to go through. And stop trying to get these quick fixes and these little credit hacks and these little stuff they say on TikTok and all of these things, because all that stuff is temporary. No, you gotta be willing to go through the right process to make sure that foundation is properly laid.
Now, once you have your PG personal guarantee, your personal credit right, how can you then take that? If you're a small business, because I know we got a lot of business owners in here. If you're a small business, how can you take your personal credit or your personal guarantee, as they like to call it, and use that as leverage to go help finance your business?
So this is probably one of my favorite parts, because you know, over the past 5-6 years, I've helped over 5,000 small and medium-sized businesses get hundreds of millions of dollars of funding and capital. And again, going back to that book of Robert Kiyosaki where he talked about leveraging other people's money. And I remember he said he bought his first investment property with a credit card.
Yeah.
Blew my mind, Chad. And I was like, man, I got to figure out that concept and that strategy. And they said that if you want to hide something, you put it where? In a book. So I went to go find every book I could so I can extract that information. Right. And so when I started to learn that there are strategies and concepts that we have not been privileged to, because most small businesses, when they start a business, the first thing they run out there to do is try to get a business loan. Mm-hmm. And here's why most businesses will never get a business loan as a startup. Statistically, 9 out of 10 businesses fail. Right. And so the bank isn't willing to take a gamble on, they don't know what we do.
Yeah, they don't know.
9 times out of 10, we have no business experience. We don't have a business plan, we just have an ideal and some passion. You know, and then if you don't get the money, that passion leaves very quickly. You know,
yes.
Immediately. And so, but what I started to learn is that a lot of entrepreneurs started using what's called creative financing by leveraging secured debt. Mm-hmm. Meaning, no, you don't go into the bank and ask for a business loan. You can build your business using lines of credit. And when I started to learn that, it blew my mind. And so I remember I went out there at the time my credit was fixed. This was around 2013, 2014, and I had got about $47,000 in credit cards. And I'm like, man, okay, how do I use this? And I said, oh wow, I can use this to pay for my LLC. I can use this to pay for my business license. I can use this to pay for all my business card, all of my startup costs. Mm-hmm. Because the average business, you could start for less than $5,000. Right. And then when I started to learn about the economics of how money works, see, this is why most people lack ambition or the passion about trying to start a business. Man, where I'm gonna come up with $5,000 or $10,000 from? Right. Because 75% of Black and minority families don't even have over $500 in savings. Right. So how can you say, okay, go start this business and you don't have $5,000? And so when I started to learn how I can leverage revolving credit, i.e. credit cards, business credit cards, personal credit cards, and then let's say I get approved for 10, 20, 30, 40,000, and then my startup cost is 5,000. I'm not having to pay back the full 5,000. Right. I only got to pay back the debt servicing on the $5,000, which it may only cost me $75 a month. Right. So now I'm not focused on breaking my back trying to make $5,000. I only got to focus on serving the debt on $75. Right. And when I started to learn those little bitty concepts about economics, then you start to learn that 98% of the top Fortune 500 companies operate on debt.
Nearly all of them.
Except Apple.
Apple, yeah, because they got cash. Yeah. Microsoft. Microsoft. Yeah, well, majority. Yeah. You're right.
So once I started to learn that, I'm like, dang. So I can go out there and get lines of credit and run my business. It's over. And so I really started to learn that, but then you have to have a level of discipline. Yes. Because you take somebody who's undisciplined and you give them a line of credit for $50,000, it can get pretty bad.
Fast too.
And so, but that's where my mentors who taught me about, accountability, who taught me to be disciplined, who taught me, all of those things. And that's why you also have to learn just about money, because, it's something called debt servicing that most people aren't familiar with. You have to, if you go out and get this credit, you have to have something that's going to pay the debt on it. Right. And the reason people are scared of debt because we go and get into consumer debt and our income can't support it. Mm-hmm. And so now there's a misconception of like, oh no, I don't want to do that credit thing because I don't. No, debt is what you use, but you just have to find a vehicle that's going to pay it. And so this is what I tell people, Chad. When it comes to growing your business, you want to have banking relationships. That's why we have BMO Harris here, because imagine being a brand new business. Your LLC paperwork ink is just freshly dry, and you can walk into the bank, you have a good credit score, and they give you a business credit card for $25,000. What could your business do with that startup cost? Right. I can maybe hire a VA. I can, pay for my business license. I can pay for a small marketing and branding campaign. Those are the things that's going to continue to keep my business thriving and starting and help and getting in front of customers. And so just learning those different strategies and concepts, man, that's how I've been able to grow my business, by really just teaching people everything that I went out there and failed my way to figuring it out.
And that's the key, man. It's not just knowing the information, it's sharing the information.
Correct.
And a lot of times we have information, we have knowledge on whatever particular topic, but we don't like to share it because we feel like if I give it to you, you're gonna do it better than me. When realistically, when you share that information, they're never gonna do it just like you. Right. And that's what we gotta learn in our community. If I know how to do something, teaching you how to do something does not take away from me, from my financial gain of that.
No, not at all.
And I think it's extremely important that we talk about financial discipline. So once we're able to get the credit, whether it's personal or business, what is the discipline and how do we use it?
So whenever I'm sitting down with people, the first thing I'm always asking is, what is your end goal? And you'd be surprised, there's a lot of people want to get credit just to say, oh, I got a credit card. And I'm like, I choose not to even work with people who are like that. I want to work with people who legitimately want to figure out how to improve their life. improve their families' lives, improve, the financial dynamic structure of their life. And so once I find out what their end goal is, then I help them put together a plan of being able to change that. And the first thing I'm always mentally preparing them for, Chad, is letting them know this is going to be hard.
Yeah.
But the hard part is because you're going to have to unlearn everything that you've learned up until that point. Because some of the things that I'm going to possibly share with you is going to go against everything that you've been taught up to this point, because of the reference points we've gotten in our lives. Typically, who were people who taught us about money growing up?
Our parents.
Which a lot of times they didn't have it.
Right.
So we have been operating in a place of doing things that didn't work for our parents, their parents, and the many generations prior to.
Right.
And that's because there was no incentive of them learning that stuff, because they didn't want our parents to know this stuff. They didn't want our grandparents, because if they did, we wouldn't be abandoning our neighborhoods right now. Right. We would be the owners of our neighborhood. And so once I find out what it is, what their end goal is, then we put together a plan to actually help them to lay the foundation. Okay, so your personal credit has to be intact. And I always say that because there's a lot of credit hacks on the internet where they're saying, hey, let me help you get business credit and you can have bad credit. That does not exist. The credit they're helping you get is like store credit.
Right.
It has zero value.
Right.
A
gas station card.
No. Right, no.
You can't buy a house with gas station.
You cannot. And so I have to help them unlearn those things. But here's why I think people buy into that stuff, because it's easy.
Yeah.
And when you're operating in a place of desperation economically, you only want to do what's easy. Because if I say, okay, Chad, this is going to take 2 years. Oh, no, let me just go do these things that... Because anytime people think the needle is moving, it feels like momentum, but it's not. And so that's why I say I have to help them to unlearn all of the stuff that wasn't working for them. Right. And so we have good credit. Now we're going to go and set up a business entity. See, banks are willing to always leverage revolving debt to businesses. Why? Because the only way a bank can stay in business is by what? Them lending money.
Right.
But again, the loophole, or I always say the strategy, because when it comes to knowing how unsecured revolving debt works, they lend that based upon several, data points like household income, projected income, and different things like that, versus the reason you don't get a business loan, one, you don't have financials, you haven't filed taxes, like there's a multitude of things. And so once now we help them get that, the first thing I'm looking to tell them is like, now we have to put together a plan on using this. And typically I want them to be able to either park it into a business that's already making money, or we're going to use it to grow your business, but our focus isn't looking like a business owner. Our focus is getting a client. Right. Because the only way you can get a client is by getting in front of people. So yeah, we're going to put together a marketing campaign. We're going to put together some branding. We're going to, not lifestyle branding, but some real stuff that's going to draw a customer. We may have to restructure your business. Does your business suck? Some people, sometimes you got a business model that doesn't work for somebody to want to come and do business with you. Right. And so there's so many different things. It's bigger than just getting the credit. I like real estate because I think that real estate is one of the easiest entry points of creating long-term wealth. I can take this credit and invest in something that's going to pay me forever.
Right.
And here in Milwaukee, I tell people all the time, Chad, this is probably one of the best markets in the country, because there's very few places where you can invest $20,000-$30,000 into a house and make $1,000 a month.
Right.
And so can you imagine using your credit to invest in some property that's going to always pay the debt? And so forever. Yeah. But then after the debt is paid off, you still own the house that's still paying you. Right. So it's just so many different concepts and strategies that I like to teach people when it comes to learning how debt works. And that's why I call structured debt.
Structured debt. That's amazing, man. I was DJ Envy was talking about people comment on how many vehicles and things that he has. But he explained in detail that he doesn't just buy all these cars that he has. What he does is he creates an asset to pay for it.
And people think a lot of times when you see people like, I just use envy because I remember having a conversation with him. He was specifically talking about that. So that should be, whatever your lifestyle is a month, I think the best way to do it is create an asset to fund that lifestyle.
Absolutely.
And speaking on real estate, that's a fast, I don't want to say fast, it's a bad term. That's a more traditional way to do so. So trying to get into the real estate game, leveraging your credit or leveraging the strategic debt that you said, how do our viewers and our guests start that process?
Yeah, so before I jump into that, so a couple weeks ago I actually went to the Mercedes dealership and I was looking at some other cars, and I buy cars and I make them assets.
Oh yeah.
And then my real estate pays for the car. Will Roundtree doesn't even own the cars. My companies own them. And then I rent my cars out, so the rental income pays for the cars. And so I like that model because when I'm talking, so anytime I'm leveraging debt, it's because it's always going to make me money. And so from the real estate standpoint, this is how simple getting into real estate is. And I think people overthink it. And I think they overthink it because the numbers are large. And it's really not as complex as people think it is. Now there's some other like nuanced strategies that can help people to be a more proficient investor, which is what I teach people. But here's the basic concept. So you take your good credit, you take your company, your LLC, you go to BMO Harris and you get a line of credit. Let's say they give you a line of credit for $50,000. All right, boom. Now, I can use a portion of my credit, and let's say I find a property out here in Milwaukee, Wisconsin, that's $100,000. That's about the going rate on average now for an investment property. Now, no matter what zip code that property is in, let's say 53206, the zip code that a lot of people are scared to invest in.
Yep.
I was buying properties in 53206 for $2,500, Chad. More than what people was getting on their tax refunds. I was begging people, look, let's buy these houses in 53206. No, the neighborhood's bad, this, that, and the third. They now have Starbucks coming up in 53206.
Right.
You know what I'm saying? Right. And so, but I saw the foresight because here's one of the things I often tell people. How often will humans need to live in homes?
Always.
Forever. So why would we not invest in the one thing that people have to do? Live somewhere. I don't care what neighborhood it's in. And I was taking my team up and down, like we was on 5th and Locust, and I bought a house over off 5th and Locust for like less than $3,000. That's now worth about $115,000 because I'm like, look, people gonna always need somewhere to live, no matter what the house look like. You just have to make it in a condition to make people want your house.
To live there, right.
And so imagine finding a property that's $100,000. For an investment property, you only got to put down 20%. So I got to come up with $20,000. I got the $20,000 from my bank.
Yeah,
I just got $50.
Yeah.
And so the debt servicing on that $20,000 may cost me, let's say, $300. You know. All right. So now I got that debt servicing, $300. Now the mortgage on the property, because the bank is going to finance the other 80%.
Yeah.
That $80,000 amortized over 30 years. Let's say there's going to be another $300-400 after taxes and insurance, $500.
Right.
Okay, so I got the debt from the mortgage is $500. The debt from the line of credit is $300. So $800. I just have to find a property that fits that metric that's going to pay me at least $1,000 to $1,200 a month.
Right.
And we know no matter what zip code,
you're gonna pay at least
$1,000.
Yeah.
So I've pre-calculated my numbers. In 53206, this is for 4-bedroom. I'm getting 12 to 15. So it meets my metric of servicing the debt. Plus, I still got some money left over. And so, but here's another reason why I think people are scared of real estate. They're trying to get rich off on property.
Right.
People have a misconception thinking real estate is quick money. And so we have to learn that real estate is your retirement plan. Real estate, true wealth is built slowly, but everybody is so busy trying to look wealthy but not doing the things to actually get wealthy. So they go get one property, barely making any money. They done upgraded their car. They buying different clothes because they want people to. They want people to know, oh, I'm a real estate investor. No, that's not what real estate investing looks like. Because if your bank account is still negative, you put yourself in a bad position.
Right.
And so it's really that simple. I find a property that's the mortgage with the debt servicing is $900, and then just make sure that the rent is giving me at least $1,200. And I do that enough. Like, I broke down a plan. You take the average person who goes to college, okay? They said the average person with a master's degree, average lifetime earnings is about $2.1 million. Average lifetime earnings. That means how much they made their entire career with a master's degree. Okay? If you think about how much they've paid in student loan debt, it's typically maybe about 200 grand for a master's degree, maybe a little bit more. If a person went and got and leveraged 200,000 from the bank and invested it in real estate, they would probably have over a $2 million real estate portfolio.
Yeah.
Which will
but
pay
that never stop.
And it never stops. And it pays them forever.
Right.
So I tell people, if you focus on buying one property a year over the course of 10 years, you will have $1 million real estate portfolio.
Mm-hmm.
And it didn't cost you anything out of your pocket because you're leveraging the bank's money. The tenants are servicing the debt. And then as your properties are being paid, you're forcing appreciation because you're paying the mortgage down. And then guess what you can do? And this is a little bit more strategic strategy. Now, if I do need money, I can go and refinance my properties and pull out all that equity tax free. So let's say if I do have a $2 million real estate portfolio after 10 years, and this is what the wealthy do. They go and now borrow money from their property. So if I can get up to 80% of that $2 million real estate portfolio, I can borrow $1.6 million tax free.
Now you can go buy a complex.
Now I can go buy a complex. Because that $1.6 million, it may cost me, let's say, $12,000 to service that debt.
Yep.
I'm making more than that from the rental income.
Yeah.
So it's never cost me anything. But your only original investment is fixing your credit. You may have to hire some mentorship and get a coach. And you got to be willing to go out there and actually execute on the information.
And that's key, man. I think that's the key point is
That's the hard
execution.
part.
Yeah, execution. Ideas are great, but they're just ideas without execution.
Definitely.
So what I want to do is a lot of audience, because I do a lot of talking. I got a big mouth, but we got a mic. If you have any questions, we got a mic on this side of the room. So if you want to ask something, feel free to come on this side. I'll continue to ask questions until I see any individuals on that side of the room to ask a question, because I'm sure you may have specific questions catered to your particular situation, and this is the best time to ask it to Will. So while they're getting ready, when you build a great relationship with a bank or several banks, what's the key into growing that relationship? So you said you started with 50,000.
Yes.
How do you continue to raise that borrowing number?
A lot of times, a couple things. One is actually using the money.
Right.
You show them you're fiscally responsible. The banks want to give you more money. But then secondly, and here's something unfortunately that happens a lot in our communities that we don't do enough of: file our taxes properly. You got to file your taxes because the bank needs to see that your business is transacting business.
That's a fact.
You know what I'm saying? And so these are the other things that I'm always teaching people. But then not only that, people also don't know you can have relationships with multiple banks.
Yes.
You can have multiple LLCs and have multiple relationships with multiple banks. And so even I know, like, with some of the bank partners that, we personally work with, like, you can have multiple companies and they will give money to all of those different companies. So it's about just really knowing, like, what's out there and what's available, because getting the money from the banks is the easiest part. They want to give it away. Matter of fact, banks have money to where they have to give it away. And if they don't, they lose a lot of their lending power.
Right.
So it's just about really being in position, man. And unfortunately, people aren't doing the necessary steps or taking it serious enough to even get in position.
And I think that's key, because if you don't position yourself for the opportunities that we spoke of, then when the actual opportunities start to come your way, you miss them because you weren't prepared for them when you got there anyway.
Because we were poor.
Absolutely.
We were being poor.
Being poor. We got a question over here. What's your name, my brother?
How you doing? My name's Phil.
Phil, how you doing, bro?
Doing good, man. Could you talk a little bit about about the intersection of your personal finances with your business finances and how they like relate to each other and how that has changed as your business grows and you become like an owner of a more high value asset.
Are you speaking for me specifically or just in general?
I mean, you can tell it through your own personal story.
Well,
Yeah, that would be really nice to hear a good concrete example of like how.
Okay, definitely. And I think I'm gathering your question. So I can remember in 2012, I was speaking with I was speaking at the time who was my tax person.
Yeah.
And up until that point, every year I was always claiming a loss because we were always taught to get a tax refund.
Mm-hmm.
Hey, if you want to get first let me put this out there. I might get beat up after this, Chad. I'm just have to say this. We have to stop living from tax season to tax season.
Man, talk about
We
it.
have to. One of the reasons we're in one of the biggest financial economic demise is because of tax preparers. And I'm gonna tell you why.
Why is that?
They've kept us poor. Let me tell you why. Because a lot of them are poor. They file your taxes in direct relation to benefit their pockets. Oh, if I get Chad,
Yeah.
and so I remember at the time, I used to always run around and say because I had an LLC, I was a business owner. And my tax person at the time said, Will, you don't have a business, you have a hobby. You ain't making no money.
You claim a loss every year.
You're claiming a loss.
Right.
And so that's when I started to learn, man, I want to take this serious. And so going back to your question, you have to start learning how to separate it. Okay? And here's how I give people the structure. Now, this is not financial advice.
We're not giving financial advice.
I'm just saying what worked for Will
For Will
Round.
Round. Yeah, we gotta say it every
And a lot of
time.
people who I've helped.
Right.
And so here's the thing. First of all, you have to learn what financial entity structure works for you.
Right.
Okay? And so I wanted to be able to pay myself as a business.
Yeah.
So I wanted to file as an S Corp. I get the protection of an LLC and I get the tax benefits of a corporation. And so as opposed to writing off income or revenue every single year, so for example, if you're an entrepreneur and you have your W-2 income, let's say combined you make $100,000. So they drive through one tax return. But you don't want to pay all those taxes because you got self-employment tax, like you have all these different taxes. So on $100,000, you may actually end up owing about $15,000.
Right.
So you're going to have a bad tax person have you write off $80,000,
Right.
and it's went through one tax return. So now it shows you only made $20,000. That's a bad financial plan because you can't buy anything
Nothing
showing your
20.
income is $20,000.
Fact.
And so what I started to do is I changed my tax liability by filing as an S Corp. So now let's say I go solely into entrepreneurship and now my company can pay Will Roundtree.
Right.
And so a part of that expense that normally I would write off as an expense,
It's going
I
to
pay
you.
me,
Yep.
which my income is taxable to the company.
Right.
And so here's something that a lot of people don't know. Whatever your salary is for your company, that's not what the job makes in profit. That's what they figured out to write off on their taxes.
Exactly.
So if your company pays you $50,000, that's because that's an expense to the company. That's not how they don't care how much you made them because they're trying to make their bottom line. They're maximizing their bottom line. And so you have to learn, like, one, where do you want your tax structure to be? Two, and I tell people very candidly, you got to pay to play. If you're not willing to pay taxes,
Yep.
you're never going to make money.
Yep.
Period. But as you start making more money and learning the different concepts of, Robert Kiyosaki has this book called The Cash Flow Quadrant. Everybody only focuses on being a business owner.
Yep.
The goal is to become an investor. Because when you become an investor, that's where the tax benefits are at. So I don't keep money in banks. I buy assets. Because now if I need money, I borrow against the assets and I don't pay any taxes. And so you have to start learning those different concepts of what works for you. But if you are not willing to pay, or as I call it, pay to play with the IRS,
Yeah.
you will never get to the places economically you want to get to. And the last thing, as I end up on this question, people who make 7 figures pay less in taxes than people who make 6 figures. Because a lot of people in the 7-figure range, they're investors.
Yeah.
And so we've learned to mitigate our tax liability through our tax structure by owning asset classes. And we're not just focused on saying we make 100,000 just to make 100,000, because taxes gonna eat you up.
Every
And so
time.
you gotta learn how to separate that properly. You gotta find a good tax strategist and not just somebody who wanna get you a tax refund every year.
Right.
Matter of fact, the goal should not be to get a tax refund.
Telling you.
That should be the goal. Yeah.
The goal is definitely pay taxes until you tell we sit at dinner talking about how much money we pay in taxes. Like, bro, they got me for such and such this
Yeah,
year.
man.
But the good thing is, if they got you for it, you got to pay. So you got to look at it like that as well.
Definitely.
Our next question. What's your name, my sister?
Hi, my name's Kim. So can we talk about student loan debt? Because I think that business-wise, a lot of people might think that that is a detriment to them having success business-wise. So do you have tips on maybe paying those off, and then how does that actually influence your business, starting your business?
Definitely. So the thing I say about student loan debt, I mean, I could go so many different directions with this. See, when I'm talking to a lot of my parents who are getting ready to send their children to school, I have them look at like college as a business. I think all too often, especially in the black community, we've looked at college as like the end goal.
Yes.
And we don't take it serious enough. Like, I've yet to meet somebody who went to school and paid $200,000 for a water basket weaving degree, and they are living the life they want to live.
Mhm.
Like, we have to start looking at college like a business decision.
Right.
Okay, if you're going to go to college and it's going to cost X amount of dollars, what is my earning potential? And we already know the average 4-year degree is $100,000 off the rip, because college keeps increasing,
Yeah.
but the income isn't.
Right.
And so, and then we have to understand college is a business, which is why they have a recruiter,
Mm-hmm.
and they get paid commissions for recruiting us.
Right.
But to answer a question, 'cause I could talk about that forever, is student loan debt definitely impacts what's called your debt to income ratio.
Yes.
Okay, so if you have X amount in student loan debt, and let's say your payments monthly is $1,000, based upon your overall income, banks or whatever you're trying to lend have thresholds of what your DTI has to be. So for, let's say you're looking at
DTI means
debt to income, meaning if you make $5,000 a month, you have to figure out which your expenses are.
Right.
And you'll be surprised, most people don't know. And I'll tell you why they don't know. Because they don't budget.
Exactly.
But then not only that, they don't know because most people live off of their gross income.
Right.
I'm gonna give y'all a real lesson here. Gross income is not what you bring home. It's gross because it makes you throw up. Because they're lying to you.
Right.
And that's how I kind of uniquely put it. You actually bring home what's called your net. So, and unfortunately, when you go and apply for a house and a car, they put you at your max budget because that's how they make their
They
money.
make their money. Right.
So they put you in a position where off top you've lost. And so this is why a lot of people are poor economically, because you're playing a game that you will never ever win when you don't understand the cost of money. So if you make $5,000, if their job says, okay, you make $5,000 a month, and I remember literally, I used to be one of these people. I'm sitting at work calculating how much I can afford for a car or house payment off of the $5,000. No, you may bring home $3,500 of that.
Exactly.
And so when you have your debt to income ratio, now you have to calculate your expenses off the $3,500, not the $5,000.
Right.
And so when you have student loan debt, yes, unfortunately, we have so many people who are in that place, and it's ruining economic potential for a lot of people. But this is how I just kind of candidly put it. We gotta bring in some more income,
Right.
some kind of way, or we have to mitigate other expenses. Now, depending on the amount of debt and of the student loan debt and how it's being charged for you at interest, sometimes we went out and have gotten people different loans to be able to consolidate their debt. Sometimes, there's different programs to help people to be able to do like forbearances and income. I forgot what they call them, like where you pay the amount based upon your income.
Yeah.
I tell people go volunteer and work for a nonprofit because after so many years they'll actually forgive a portion of your student loan debt. So it's a lot of different ways, but the biggest thing that we really have to learn, no matter where your income is at, your expenses, if your DTI, your debt to income ratio is too high, we have to bring in more income. Sell stuff on you know, Craig's, like we have to figure out a way to make other income, because that's the one thing that is normally the hardest for most people, is because most people are over leveraged.
Right.
And we just got to bring in more income, you know, some kind of way. And sometimes you'd be surprised how simple it really can be. Simple doesn't necessarily mean easy.
Right.
It just means we have to get more strategic.
Right.
But yeah, student loan debt, and I tell people there's really not a cute answer to
Student
solving that problem.
Right.
You know what I'm saying?
That makes total sense, man. Get we'll take this our last question from the audience. Yes, sir.
Appreciate it. My name is Scott, and my lady and I, Tiffany, she's sitting in the back. We are at that point where we got our personal credit pretty much lined, really good place. Started our LLC. We're going to get into real estate as well. And the thing is, we're trying to figure out, like, what are some of the specific things we can do to build our business credit so that we can later move our home. We both own a home, each we want to move those into the LLC, right? And so how do we build that business credit so that, to your point earlier, we can go to the bank and the bank is looking at it as a viable place for us to either loan or borrow money against? And we're just kind of struggling with that right
Yeah, no, very quick. I love that question. So I know there's a couple questions in there. So when it comes to first, do you own the home outright?
Yes, we both own it, yes. We have to, I mean, there's still a balance in the mortgage, but we own both homes outright.
Okay. So I often tell people that I would probably, if you have houses that are your primary residencies, I would put them in a trust, your primary homes. Investment properties, you can have a trust that owns the LLC. You definitely want to put all your investment properties. But if there's a lien on the houses, especially if you did it through FHA, the bank will not let you put those in an LLC.
Mm-hmm.
The bank will not let you put a primary residency into an LLC. And there's some advantages and disadvantages of doing that. I typically tell people, your primary residency, I don't think I would want it in an LLC anyway. I would rather solely have it in a trust, because you have to understand too, that LLC, if it gets sued, you could lose that property.
Right.
So so I often tell people everything is going to be dependent on their particular scenario. But I would not put my primary home under an LLC. Now, as far as like how do you properly position yourself, and I love this question. So now, let me give the upside and the downside, because there's a lot of bad information out there when it comes to business credit. So I know a lot of people talk about these, a lot of people talk about, hey, go out there and get these net 30 accounts. You don't got to do all that. I'm telling you. It's basically people who are selling people on old information from like 2005. And so literally, here's all you have to do. And we have some bank partners back there. Hopefully you get with BMO Harris, and you probably already qualify today. If you have good credit, you have an LLC, you at least can go and apply for 2 different credit facilities, okay? You can apply for a personal credit card and a business credit card right off the rip, even if your company is a day old. Let me tell you why that's powerful. So let's say between both of those credit cards, on the personal side, you get $25,000. On the business side, you get another $25,000. You now have access to $50,000 of credit that you can use. Now, you can go to Bank 2, do the same thing. Get another personal credit card, another business credit card. Now you have $100,000 of credit that you can use. Now we have to understand our ratios. On the personal side, you don't want to go over 30%. Typically on the business side, generally about 50% of the debt on that card. So now you calculate how much you have your borrowing power. And so then from that standpoint, I find a property that I can use. Now, one of the biggest mistakes people make is they think you get the credit and go buy the property cash. No, I'm going to still leverage the banks. I'm using the lines of credit as what I call my soft costs, which is my down payment, my appraisals, etc. So again, if I find a property that's $100,000, I know I gotta come to the table, maybe 25,000, because I got, the 20K is the down payment. I have my closing costs, I have my appraisals, inspections, so I need 25,000. But I got 100,000 from these credit cards. Okay, so now I got that. I use that to go and invest in a property. I've done my calculations before I've invested the property, so I know what my ROI is after servicing all of the debt. And once I see that that makes sense, then I can go through and execute with that strategy. Now, I do that for 2 years. I'm making sure I'm filing my taxes. I have leases. I have Schedule E's. I'm reporting the rental income. Now, I can go to the bank and apply for a business line of credit, because typically banks want you to be at least 2 years old. And so you can apply for some banks up to $250K. But let's just say you apply for another $50,000 on a business line of credit from that company. So now you can go and apply for the line of credit at both of those banks. So now you just went and got another $100,000, which gives you a total purchasing power of $200K. So it really is just a strategy. And here's the thing I tell people. You can get funding forever. And that's really the strategy and the concept of what savvy investors do. There is no cap on how much capital a bank can lend a company.
Right.
I mean, I think I'm up to probably like 12, 13 entities, which all of them I have capital for, because I use them all for different investment purposes, whether it's real estate or buying businesses. But it really is that simple.
That makes sense, man. Listen.
Yo, what's going on? So we are out here in Milwaukee, Wisconsin. I'm wrapping up my event that I did with my brother, Chad Sino Roper. Look, if you missed this event, you definitely missed out on some gems. We had banks in the building. We had people who have traveled from all over in the snow and everything. But more importantly, we delivered valuable information. And even more importantly, I'm still out here in Milwaukee looking for some properties. I'm looking to take advantage of opportunities and all that good stuff. So make sure you stay locked in. Look, I'm gonna show you how to get rich off of information. So I appreciate y'all. Make sure y'all continue to like, follow, share, comment, all that good stuff. And y'all already know, as always, I will see you at the top. Let's go.